Hello and welcome to today's pre-market video, which is called Don't Fall for this Trap. And of course, I have in mind what yields the dollar have done lately, how it ties into S&P 500 price action, and what is the message that gold is sending us. So let's dive into the charts. Thank you for liking this video and subscribing to this channel. Thank you very much. This does help to reach more of you. You pretty well know what I do on my side for clients and for you as followers as well. So make sure that you make great use of it by selecting what's right for you on the joint page. Let's dive without further ado to the yields chart, and we see quite clear intraday rejection of yields moving higher. Are they permanently rejected? No, I don't think so. I had been clear about the 10-year marching over, not just to 5%. So we are just seeing the daily performance, daily rise in yields stall. This ties in as well to US dollar taking a little bit of a breather. That means taking it rather today pre-market than yesterday, because what were the turning points yesterday when it comes to equities? For a while we got buying emerging towards the close and quite interesting sectoral developments that I will dive into. But first of all, let's revisit this precious metals chart, where you can see reminded in visual form that I called for non-farm payrolls not to affect the ascent in gold and silver much at all. Usually on most days, but that is very far from a rule, some kind of a risk on / safe haven demand pushes precious metals higher, and they come to their senses 1 or 2 days later, which is exactly what had happened on Monday. That's why I already on the weekend called, I published this article only in pre-market hours Monday, but I called for no more ascent in gold, and to the contrary, for consolidation to the downside. So you can put a tick on this call as well, because we had seen quite a stark reversal. Volume is though not completely confirming it, therefore I'm looking for sideways price action into PPI, and given what I expect from PPI, let's go into this part a little bit later on when I dive into equities for you. I do look for a little bit of an upswing relief rally in gold later on, developing today. This of course does not totally apply into and through CPI, so stay tuned for more and make sure that you are subscribed to the channel, because all the videos are connected and you get usually extensive weekend views with daily updates at various times, so turn notifications on please as well. Now this is the S&P 500 breadth chart, and we can see that it leaves quite something to be desired. A lot of too many stocks had been hitting intraday lows. Sure, they partially recovered, as will be seen from further details featured on following charts, but is this a good enough improvement? We got Monday's daily hammer, but the question remains, is it only a short squeeze or a genuine reversal? Will we revisit the lows? Will these hold? Or is there more downside to come? Will it be PPI or CPI that would cause greater issues for stock market buyers? And what would be the sectors that would be benefiting? These are all pretty valid questions to ask, and looking at yesterday's after the close charts, I can say that we had seen a risk-on sectoral day. I'm reserving my interpretation for premium clients, and I will hint at more clues. I will bring you more clues as we go in this video as well, of course. Here you can see that the percentage of stocks trading above their 50-day moving averages barely improved. Barely. Is it good enough? Is it not good enough? A look at this chart says that the glass is rather half empty than half full. Of course, the shorter periods bring improvement, so a larger improvement visually as well. So that's why the percentage of stocks trading above their 20-day moving averages did jump more thoroughly. One could argue that we are seeing a bullish divergence in the making, which would bring one more clue as we go into PPI and the reaction to this data release later today. So here goes your clue as to what I expect, which way I'm rather leaning when it comes to today's regular session and the data reaction. Finally, let's have a look at the sectoral composition on a one-day basis. Pardon me, but risk-on would necessitate greater technology involvement. Sure, tech held an important daily support level, but Nvidia as well did shake off bad news and closed near the intraday highs, which are all bullish developments. But financials should be doing a bit better. Communications and staples together with tech had been relatively lagging on today, and the more economically sensitive sectors such as materials and the driver of past week, energy, had been benefiting. So the sectoral view is going into today slightly erring on the risk-on side, which brings me to field the CPI PPI prediction. PPI I am looking not to sink per se, sink as in the meaning of the word sink equities. However, when it comes to CPI, the table is tilted the opposite way, so I'm looking rather for a setback tomorrow than already today. And of course I will be positioning clients with the appropriate calls for that accordingly. So thank you for liking this video. I will be linking to several others as well, helping you select what's right for you on the joint page. You know my trading journey and varied background, obligatory disclaimer, and let's talk more on Twitter and Telegram, and of course on YouTube. Thank you and see you.